Hi, everyone. I'm Vladimir Duthier. We are watching all the news happening in the United States and around the world, and all eyes right now are on Wall Street, where stocks are down sharply once again after the market open. It could be the third straight day of major losses after President Trump announced sweeping tariffs last week. I want to get straight to the news and bring in CBS News Money Watch correspondent Kelly O'Grady, who's joining me live right now from the floor of the New York Stock Exchange. Kelly, looking like this morning is going to be another rough one on the street. What are you hearing from traders?
It is, Vlad. We all lined up to get into the NYSE this morning, and I was just talking to a few investors in line, and the feeling was very much anxious. Not that things are falling off a cliff and that we can't rebound. There was still a little bit of hope amongst folks, but certainly beaten down. And you can see that in how the international markets reacted this morning. You see it in the market right now. And something that I know you and I have talked a lot about before is something we like to call the fear index. The volatility index, the VIX, that actually just hit above 50. Last time I was just looking down at my phone, it dipped below that. But basically what that means is investors expect there to be a lot of uncertainty and volatility over the next 30 days. So Vlad, yes, a lot of fear about today, but a lot of fear about the next month as well.
That's an important number there, Kelly. Of course, the VIX measures volatility in the stock market, and it gives you a sense of how worried investors are, not just about the market, but also a possible recession, which now economists, as you know, and even some prominent bankers are suggesting there's a 50% chance that the United States enters into a recession. Meanwhile, this morning, the president of the United States says on social media, quote, there is no inflation. But as we just pointed out, folks like Jamie Dimon are saying that the tariffs will likely lead to inflation. So help us break down the reality here.
So the reality is there is inflation. The president saying that there's no inflation, that's simply not true, or potentially, a misturn of phrase. I think what he's referencing is that the last consumer price index reading about a month ago, which was the first under his term, actually saw inflation cooling. That just means that prices are still rising, just slower than they were before. We're going to get another read this Wednesday, so we'll kind of see if that trend continues or we're seeing that tick back up. But really what you are having analysts, CEOs like Jamie Dimon talk about is what could happen, the what if. And that is really what investors are trading on, that sure, the economic data does not say we are in a recession. And in fact, we got a great jobs report on Friday. But what happens if these tariffs do lead to price increases because businesses have to pass that cost on to consumers? Does consumer spending slow down? Does that weaken the economy? So both things can be true at the same time, but really what you're hearing from folks like Jamie Dimon is the future versus what's happening right now.
And for investors, specifically those folks who have longer-term outlook on their portfolios, look for, I understand that if someone needs the money now, if retirement is happening in the next 6 months to 12 months, or you got a kid that's going to college next year, you might need some of the money that you have invested in the market. But if you are everybody else who's looking at what I'm looking at right now, showing the Dow down almost 3%, what's the general consensus from financial advisors on what people should be doing long-term?
So I spoke to a number of folks this week, and they are saying if you don't need the money right now, hold. Don't look at your portfolio. Just remember the pandemic. We saw big market routes, and then we came back within a few years to record highs. So these swings happen, but this is also a good time to talk to your financial advisor, because maybe you want to move some of your money around to more stable returns, like a money market fund. There are different things, if you don't feel comfortable with this level of volatility, that you can rebalance your portfolio. But even if you are going into retirement this year, you're likely not going to be accessing all of those assets all at once. So there's also a little bit of time for things to come back before you might need that a few years down the line.
Although, Kelly, as you are on the floor of the exchange right now, and I'm just so curious to know what people who've been in this game for a long time are thinking about, because you pointed out the COVID pandemic. I was a young Wall Streeter in the early 90s. I watched the Asian crisis hit. I watched the tech bubble burst in 2000, and of course the housing crisis in 2008. And in each of those instances, there were a lot of different market forces that led to the cratering of the stock market, and in some cases, a recession. Here, it's just one guy. It's the president of the United States. This is all self-inflicted. So I would love to be where you are today, just getting a sense from these folks as to what they think about something that is happening based on the moves of just one single individual, not a bunch of different forces and things that are unpredictable like a global pandemic.
It's a good point, and it's certainly something I'm going to ask people here today. So I'll report back on what they say. But that is fair. This is one person, country policy versus something like a COVID. Yeah.
All right. Kelly O'Grady for us. Thank you very much. For more fallout now overseas, I want to bring in CBS News foreign correspondent Ramy Inocencio, who's joining us now from the UK. So what are you hearing on your side of the pond, Ramy?
Hey, Vlad. Yeah, well, just like the sell-off that you're seeing in the United States, it's a three-day sell-off around the world. The superlatives here keep rolling, and they are all continuing to be negative. Kelly just now talked about how stocks fell the most since COVID, but Asian markets, they fell the most now since the 2008 great financial crisis that you just spoke about yourself there. If we flip up the boards, we can see how Asian markets did. They are now closed. The Nikkei hit an 18-month low, down nearly 8%. That is now in a bear market. What does that mean? That means it's lost 20% since its most recent high. In fact, earlier trading, it had to be suspended because there were just so many investors, or I would say people pulling their money out, not investing in, but pulling their money out, that they actually had to stop the exchange. Also, the Hang Seng, look at that, down more than 13%. That is its worst fall since 1997, and that is a pivotal year because that was the year that Hong Kong returned to China with fears very, very prescient about the Communist Party there. Trading was described as indiscriminate, but not just because of Trump's tariffs, but because of Beijing's retaliatory tariffs of 34%. We also see on the board here the SSE composite, that's a Shanghai composite there, down 7.34%. Taiwan's TAIEX there, 9.7%. I mean, this is just bad to worse. Taiwan's TAIEX had its worst fall ever. That is now also in a bear market. Taiwan, we know, is hit with a 32% tariff. And Taiwan, you remember, is also a very tech-heavy. So there is a lot of impact here with regards to the tariffs that that Trump is trying to put on U.S., Hong Kong, as well as Taiwan for Greater China. Right now, UK and European markets still have about an hour or two to go before the close. Some good news, though, is that they are off the lows of the day that we're seeing here, but still down 4 or 5%. Apparently, traders think that the Fed will cut interest rates more and faster to boost consumption and growth. But in all my time covering these financial markets, the question now that I'm wondering is whether it will be enough, and many will say that it will not be enough. You talked earlier about the chance of a recession being forecast in the U.S. And the world, and there's the fear there. Kelly talked about the volatility of the VIX index. That is the mood, not just in the U.S., but around the world. And for now, there is no end in sight until and unless President Trump changes his tune.
And so far, he's holding firm. Ramy Inocencio for us. Thank you, Ramy. Despite the market turmoil and recession fears, the White House is continuing to defend their tariff policy. U.S. Secretary of Commerce Howard Lutnick doubled down on Face the Nation yesterday and said those tariffs are not going anywhere.
There's no postponing. They are definitely going to stay in place for days and weeks. That is sort of obvious. The president needs to reset global trade. Everybody has a trade surplus, and we have a trade deficit. We are paying away our future and our lives. The countries of the world are ripping us off, and it's got to end. The president has made it crystal clear. This is the policy we are going to protect. The factories that come build in America, we are going to protect them.
I want to bring in CBS News congressional correspondent Caitlin Huey-Burns, who's joining me now from the White House to talk more. Caitlin, I mean, we've had it reported that 50 representatives of various countries have reached out to the White House to engage on the issue of these tariffs. But as far as you know, the president hasn't met or taken any phone calls or no readouts in signaling any kind of discussion that he's having with some of these leaders. In fact, as Ramy just reported, we know that EU officials are getting ready this week to vote in a list of retaliatory tariffs against the United States. In other words, just like China, they're calling his bluff.
Well, Vlad, moments before we came on air here, the president took to his social media account, Truth Social, to say that he's been hearing from leaders from all over the world and that he just spoke to the Prime Minister of Japan today, and that Japan is now going to send a delegation here to Washington to start negotiations. But Vlad, the point is that you were seeing mixed messages from the White House. You had administration officials kind of fanned out over the Sunday shows yesterday trying to sell and defend the president's tariff policies. But some were saying, as you mentioned, Howard Lutnick there, saying that, look, these tariffs are set in stone. There's no changing. We're going forward. Others, however, kind of saying, look, this is a negotiation tactic. This is starting conversations with world leaders to try to get better deals. So the question is, which is it? And then you had the president last night on Air Force One saying that, look, you know, he doesn't like that the stock market is plunging, but you have to take, in his words, some medicine to fix things. That's how he described it. That's the metaphor he used here. So the big question is kind of what negotiations are happening exactly, and is that the intended plan here? Because remember, that baseline tariff of 10% went into effect on Saturday, but this Wednesday, that is when even bigger tariffs are coming. Those reciprocal tariffs are planned to take effect. Not a lot of time between now and then, and you saw this morning how the markets are reacting.
Yeah, markets are still extremely volatile, Caitlin, as you know. And so the question, of course, becomes, and this is something that I've been thinking about in talking to some of my friends who are on the street, on Wall Street, which is even if some of these countries make concessions based on what the president is suggesting, whether it's helping in his immigration battle, whether it's stopping the flow of illicit drugs, as he's indicated he wants Canada to do, the question, of course, becomes, will that be enough to ease fears? Because the reason the market is volatile is not just because of these tariffs. It's because the market, if there's one thing the stock market hates, it's uncertainty. And with President Trump, you guys know as well as I do, every day brings something new with this president. So how confident is the administration that even if these countries come to the table with something, that there won't be something tomorrow that sets the market off again?
Yeah, and Vlad, I mean, you covered the markets for a while in your previous reporting career, so you know this well. You know, what's fascinating here is I keep thinking about this idea that Donald Trump has been talking about tariffs since before I was born, right? He has been talking about this for nearly 4 decades. And he talked about it nearly every day on the campaign trail. He said tariff was his most favorite word in the dictionary. He has made clear that he was going to do this. But you had lawmakers on Capitol Hill, those in the markets, not quite sure what exactly that would look like. So on one hand, while he's been threatening the use of tariffs for a long time, and he used them in his first administration, there wasn't necessarily a plan to ease those concerns when it comes to investors in the marketplace. Because you mentioned uncertainty, the idea of, okay, these tariffs are going to go in place. Do we have clear investments here in the United States to make up for that? Because this has been the principle from this administration that the whole point of this is to get a fairer deal for the U.S., to get a fairer deal for workers and have more investment here, make things here. Well, it's very hard to make plans for investments with this kind of uncertainty. So that remains an open question. We'll see what the White House says.
All right, Caitlin Huey-Burns reporting from the White House for us this morning. Thank you very much. Let's show the big board now, which is up about 0.5%. And this just means that things remain volatile. We'll probably see the market have these kinds of swings over the course of the next couple of hours, even over the course of the next couple of days. So obviously, we're going to keep an eye on the stock market and on what's happening outside of the United States in some foreign markets, and of course, bring you updates as warranted.